This video series is about government-sponsored savings plans or government-registered savings plans, however you wish to say it. The next one I'd like to talk about is tax-free savings accounts. And I've been known to say that this is my favorite one of all, and maybe it's because of the words tax-free, because I like tax-free, and everybody likes to think of having things that are tax-free. So it may explain why everybody has embraced these so readily and rapidly. And it was very good choice of terminology on these things. Now, because they're tax-free, it's hard to imagine anything that's bad about them. If I can put money aside and earn income over time, and then take that money out and not pay any taxes on it, these are all very good elements. In fact, in our tax regime in Canada, it's really almost impossible to earn income that isn't taxed in one way or another. To most of us, the only place we got truly tax-free income was for the growth of our personal residences. Now, so I think the important thing about tax-free savings accounts is how do they fit in to everything else I'm doing? Is it still better to have a tax-free savings account versus having an RRSP? If I have limited funds to put aside, should I be putting it into a tax-free savings account or should I be putting it in an RRSP? So if you look at, and again, what I was always stressing in when we talked about RRSPs and RIFs, is this is about taxes. And again, the reason I like this thing is it's quite clear. It's right in front of you. It's tax-free. The tax is in the word. So we should be able to keep focused on this being about taxes. So when I have some decisions to make about whether I should use a tax-free savings account, if I'm currently got investments that are not inside an RRSP, there's really no harm in putting them in a tax-free savings account. I can put the money in, I can readily get it out. So while it's in there, I'm not going to be paying taxes on what it earns. And when the money comes out, I won't pay any taxes at that time either. So like I said, it's really hard to find anything, reason not to use these things. But in context of an RRSP, if my RRSP will give me a refund up front and kind of allow me to put away more money by doing so, maybe an RRSP is the right product for me, particularly when I have the ability to take income that's being taxed today and put it away and then pay less taxes on it when I take it out because I'm at a lower tax bracket. So where a tax-free savings account certainly allows me to put money in, earn some income on it, and never pay taxes on what I earn, the RRSP allows me to put money in and shift that tax that would be paid on that money from a high tax bracket to a lower tax bracket. So that's a win that exceeds a tax-free savings account. Maybe. Because I have to keep in mind that the growth of what I put in my RRSP is going to be taxed when I take it out. So it is quite possible that I may put money into my RRSP, do well on my investments, and when I take that money out, pay more taxes than I want to pay. If it was in a tax-free savings account, I may have invested less because I didn't get a tax refund, but I'm going to pay no taxes when I get it out. Again, it's really comes down to evaluating within your own context of what your own financial environment is. Everybody has a different tax rate going into these plans. Everybody has a different tax rate that's going to result from taking money out of these plans in the future. And everybody has a different tax rate along the way. And so evaluating these plans just on the basis of, well, it seems like it's a good thing. It seems like RRSPs would be better. It seems for me, tax-free savings accounts, you can't do that without fitting them into a overall plan of your finances for the rest of your life. And so to make good decisions in using a tax-free savings account, as well as using your RRSP, you need to understand what your tax environment is. Now, the other thing about tax-free savings accounts, they give us a way to take advantage of RRSPs in either not using the RRSP, which I just alluded to, or actually taking money out of my RRSP and my RIF at a time in my life when my tax rate is low and put it in the tax-free savings account so that in future, anything I earn on it won't be taxed anymore. And a perfect example of this is whether it makes sense for people to take money out of their RIF in their later life and shovel it over into their tax-free savings account, thus reducing the amount of the RIF that is going to be there when they die, and but not create any new taxes by shoving it into their tax-free savings account. And many calculations have been done that say that if I have the prospect of still having money at the end of my life, I may be better off having it inside a tax-free savings account when I end my life than inside a RIF when I end my life. And so I need a strategy to maybe move it from one to the other. But again, tax-free is tax-free, and that's good. And certainly encourage everybody to use them, but you have to fit them in the context of how they're working with your other plans. The use of these tax-free savings accounts just become, anything I put in them, I'm going to gain from. It's only a question of what do I put in them so that I can gain the most from them. And again, how do we decide that without looking at your total affairs and understanding that I've got the opportunity to put some of my investments in a RRSP or a RIF, some of my investments in a tax-free savings account, or keep some of my investments in neither. And unless I understand my tax environment, I can't possibly make good decisions around that.